Hey there, guys. John Hunter with New American Funding, your mortgage guy, coming back to you again this week with another rate update. This one for the week ending in January 5th. So, this week has been a case of one step forward, two steps back on the interest rate front as rates ticked up slightly. We have the 30-year fixed at 6.5 to 7.25, 15-year 6.125 to 6.75, FHA 6.5 to about 7.25. VA 6.25 to about 7.125. Those rates vary based on the loan purpose, purchase versus refi versus cash out refi, loan type, property type, credit score, loan to value. There's a lot of variables there. So if you want to quote, feel free to reach out. I'd love to give you an individualized one to help you get it dialed in. But that gives you an idea of the range. It's just a tick up from the previous week. The U.S. jobs report, the market showed an unexpected strength in December. It came in at 216,000 for the month, and that was a little bit higher than expectations and really kind of throws in a wrench in the Fed's narrative of tempered inflation, weakening, and employment that would allow them to cut rates sooner than later. So the market is just kind of tossing this around. I think that it's a little bit of profit taking too, the first of the year. We've had such a great run there in December with rates dropping almost a point since October, with the market really embracing this idea of the Fed cutting rates sooner than later. And this is just really kind of a reality check. I think really what it is it's a case of markets, whether they're going up or down, just don't go in a straight line, right? So you just see these little bumps and valleys, and I'm sure this is a case of that. If it just went one direction, I would think that something's bad's going to happen. So this is a normal part of a fluctuation. I think the trend is still down, and it's just when. That's really the question. Is it going to happen in March? Is it going to happen in April or May? So I think really that's what the market's playing with here. And you have a lot of things really in favor of lower rates, right? We have an election year, which honestly, I've always fought that narrative because there's always underlying reasons that have nothing to do with the election that seems to correspond. But honestly, you can't deny it. I mean, every time there's an election year, rates drop, right? And the Fed, I think, more than ever is playing God right now with the fact that they changed their tune when they changed their tune. It's just I'm not a conspiracy theorist, but maybe a little bit here. But anyway, I think rates are coming down for a lot of reasons, and maybe that's one of them. I think as we get into the spring, that should really pick up. I'm seeing a lot of activity, a lot of optimism with rates, and I think that that's well-founded. So we will continue to watch it, and I'll be coming back every week. So please like, subscribe. I'd love to help you out if you have any need to either purchase or refinance. And next week, I've got a couple cool videos coming your way. One on trigger leads, which is all about unsolicited sales calls that come to your cell phone that everybody hates and how to stop it. And another one on New Year's resolution. If your New Year's resolution is buy a house, you don't want to miss it. So come on back and like and subscribe. And I'd love to talk to you if you have any questions. So comment. And if you have any ideas on videos, I'd love to hear. So take it easy. John Hunter, your mortgage guy, and I will talk to you soon. Bye-bye.